Welcome to Matters Financial and Geopolitical from a Frontier. I hope the week's gone well. It's very, very hot in Nairobi and we're in the middle of a drought. There's no rain. And it's going to have a huge impact on the economy, I'm afraid. Last September, we flagged a 2019 drought as the number one downside risk to Kenya's GDP in 2019. Unfortunately, this risk is becoming a reality. Charlie Robertson, Renaissance. KCB Group has made an offer to acquire national banks subject to shareholders and regulatory approvals. They were surely being encouraged to do that by the government. This is a comparison between the two balance sheets and earnings of KCB and NBK from Ochirob. It's a 10-for-1 purchase, 10 ordinary shares of National Bank for 1 ordinary share of KCB. KCB trades on a price-earnings ratio of 5.741. NBK, which had a market cap of just $13.52 million before this takeover was announced, trades on a PE ratio of 219.5. Have a look at this comparison over 10 years, KCB versus National Bank, dividends not factored in. Nation Media, we discussed it a little bit yesterday, reported full-year earnings per share declined 14.493%, headline revenue down 9.076%. Profit before tax down 16.4%, EPS down 14.493%. Total dividend at a 10-year low, down 50% at 5 shillings a share. Have a look at, there's a link there for the investor presentation worth having a look at. Revenues for digital grew by 13% in 2018. Audiences have migrated to different platforms, exhibit diverse consumption patterns. This is what I wrote. It's a top quality franchise, but we have seen a more than 5-year decline in turnover, EPS, and the dividend payout is at a decade low. The trend speaks to a perfect storm of the switch to digital. However, in Africa, we have not seen the switch to paid digital subscription, unlike the New York Times, Washington Post, and Financial Times, for example. So there's been a big macro gale force wind and print has been in the firing line, and the Daily Nation was always the cash cow. The violence of Dr. Kiboro's comments speaks to a deep level of unhappiness about the local conditions, which have been adversarial for quite a time. Counterintuitively, that informs us absolutely that they have been meeting their watchdog role. Share prices retreated dramatically over time, and today's valuation, the business is worth $115 million, which is clearly too low. The dividend is the equivalent of 8.09%, which is in fact juicy. I would have thought that this is a share worth looking at more closely, particularly on any reverses. Of course, the question is about the pivot. It is, after all, a Schumpeter-level moment in this industry. And can the pivot lead to a rebound across all the metrics? I would say eventually, but eventually can take a long time. 50 million shares of Britam were acquired by Swiss Re, giving them a 15.79% stake in Britam. Of course, IFC and African Invest muscled in on the shareholder register last year and are offside nearly 50%. There's a link for an interview with Dr. Benson Wairegi. There's a link with an interview with George Odo of African Invest, and there's a link to the share price data. Market capitalization, $214.49 million. NIC and CBA Group got the requisite approvals from their respective boards around the merge of the two banks. The banks expect that all the requisite approvals will be obtained by June, allowing shares of the merged entity to commence trading on the Nairobi Securities Exchange on July 17. Nairobi all shares up 13.07%, the NSE 20 is up 2.15%. We're back on Metropole TV at 8 p.m. I've got George Bodo in the house. That should be fun. Talking about the banking industry and what I've just spoken about. Do dial us up between 8 and 9 p.m. on Go TV and Star Times. Our show is called The Smart Investor. I wish you a wonderful long weekend and I'm looking forward to it myself. So thank you once again for stopping by.